Welcome to the Hurst Trading Room. This is our video update for the 21st of January 2013. Today is Martin Luther King Day in the United States, and so the markets will be closed today. They will be reopening tomorrow on Tuesday, and as always, surrounding holidays, you must trade with caution because there is often some volatility surrounding holidays. So that's one thing to be aware of. Before we move on and take a look at the markets, please make sure that you are familiar with our disclaimers. They are very important. Let's take a look first of all at the S&P 500, and in last week's video I presented this analysis, of course, which is my preferred analysis, which places a 20-week cycle trough in the middle of November 2012. And the 40-day cycle trough occurred between Christmas and New Year. And in terms of our trading opportunities, we had our A category profitable trade towards the end of November, which was of course a trade that we entered and profited from. Then we had our B category interaction. We never trade a B category short trading opportunity. Then our C category long trading opportunity, and then D before Christmas, and our E category trading opportunity, which of course was an opportunity that we missed because a good deal of the move took place on a public holiday on the 1st of January 2013, and we are expecting next our F category short trading opportunity. And as you can see, the market has stayed above the 20-day FLD. It dropped down and almost touched it. There is in fact only one tick between the FLD and the low that was last week Tuesday, only one tick. So just shows you how important these FLD levels are to the market. Price will often fall just down to the level of the FLD and then bounce back up again, or of course reach up to the level of the FLD and then be repelled downwards again. We are expecting an F category short trading opportunity next, according to this analysis, and so that's what I'm standing by to enter. Of course, I certainly won't be doing it today because today is a holiday, and so tomorrow is the first opportunity I might have to enter into this trade. I would enter into that trade at the level of the FLD. So there's the level of that FLD. That's what I'm looking at doing next in the S&P 500. Now, there are alternative options in terms of the analysis in the S&P 500, and one of those, although an unlikely one in my opinion, is the analysis that Sentient Trader is now returning as the default analysis. And this is an interesting analysis. Let's just zoom out here a little bit and speak about it for a moment, because it is a possible analysis, although in my opinion not a very likely analysis. This analysis has the 20-week cycle trough back in early September, and if you've been following these videos for a while, then you will know that towards the end of October and early November we were considering this as a possibility, as a possible analysis. The 80-day cycle trough then occurred in mid-November, and here of course again a 40-day cycle trough between Christmas and New Year. Now this is an interesting analysis because it doesn't in fact change the trading decisions that we're making at all. All it does do is it affects the underlying trend slightly, and therefore it affects our position sizing. So I discussed this in detail in the detailed video about the S&P 500, but as you can see, according to this analysis, our next trading opportunity is also an F category short trade at the level of the FLD. Now the FLD is at a slightly different level on this chart because of the different analysis. Remember, an FLD is plotted on the basis of the analysis that has been performed, which is why the analysis is so important. So the FLD is at a slightly different level. The underlying trend on this chart is currently at -5. So that would have us entering into a short trade at maximum risk. Okay, and whenever I am presented with two possible alternatives, I will always choose the lesser risk alternative. So I'm certainly going to be trading on the basis of the underlying trend of -3, which is the underlying trend on the other chart. And I will be choosing the FLD level that gives the market the most room. So in other words, I'll be choosing the FLD level between these two charts that gives the market the most room to move. There's much more detail in the detailed S&P 500 video about those options. Let's take a look at the Nasdaq. You will know that over the past few weeks I've been tracking a possible alternate analysis in the Nasdaq, and it's important to remember that this alternate analysis doesn't necessarily just apply to the Nasdaq. This is a possible alternate analysis for all of the US markets, including the Dow, the S&P 500. So this is a possible analysis. It's the easiest analysis to perform in the Nasdaq because of the positioning of troughs in 2011. I discussed that in the detailed video about the Nasdaq. But the possible analysis is that the 18-month cycle trough formed in the middle of November. So that's what this analysis indicates. And of course, the trough that occurred between Christmas and New Year might also be of 40-day magnitude, in which case we end up with the same analysis we were looking at a moment ago in the S&P 500. What is more interesting is to consider, again, the alternative analysis, which is that trough between Christmas and New Year was a trough of 80-day magnitude. Okay, so that's what this analysis considers, that the trough preceding the big bounce into the new year was a trough of 80-day magnitude. And if that is the case, then the long trade that we were unable to enter because, of course, it happened over New Year's Day, that was an A category trade, and what we're looking at now is a B category interaction. Okay, and if what we're seeing now is a B category interaction, then what happens next? Well, obviously, a C category interaction would happen next. So it is possible that we're looking at a C category long trade in the Nasdaq next. And in the detailed video about the Nasdaq, I discuss how I would enter that C category long trade. We would have to use a price level entry above the level of last week's high, and so I have that set up as a potential long trade in the Nasdaq. And so this raises a really interesting question, because of course the analysis that I believe is playing out in the markets has the US markets falling, as was presented in the analysis that we saw in the S&P 500. And as a matter of interest, I always assume that if you're doing the FLD trading strategy course, that you are also tracking the blog posts that I write each week, where I discuss various aspects of the analyses that I'm looking at in the markets and that I'm trading. And just in case you're not, let me just show you how to find those blog posts. Here we are. This is the Sentient Trader website, and if you go to the Hurst Trading Room menu and then come down to blog, then you will see a list of all of our blog posts, and there is a weekly blog post that I write, which gives a general overview of the analysis that I believe is taking place. So you can see, if you click on this read more button, this is last Saturday's blog post posted on January the 19th, and so I present my reasoning for believing that indeed the markets are about to fall, or at least the US markets are peaking and are about to turn down. So as I mentioned, in the Nasdaq we have an interesting situation, because although the analytical part of my brain is telling me that the markets are about to turn down, by following the rules of the FLD trading strategy, I am standing by to enter into a long trade. So that's a really interesting situation, because the long trade that might be about to occur in the Nasdaq is a C category long trade. And it demonstrates the importance of having a trading plan, a trading strategy. Very often when we analyze the markets, of course, we get so convinced that our analysis is correct that we become blinded to other alternatives and other things that might be happening. And that's why having a trading strategy is so important, because we're able to follow the rules. And I know that according to the rules of the FLD trading strategy, when I have a possible analysis such as this one presented on this chart, then my next trade is a C category long trade. It's as simple as that. And I need to do everything necessary in order to take advantage of the potential profit that could come from that C category long trade. It would surprise me if the markets did break out to new highs over the next week or two, but they might. And if they do, at least I've been making the right trading decisions. Interestingly, because there is an alternate analysis, of course, in the Nasdaq, which matches the analysis that we looked at a moment ago in the S&P 500, I am also standing by to enter into an F category short trade, and so I would do that at the level of last week's lows. And so the Nasdaq is in a really interesting situation where I'm in fact standing by to enter a long trade, and I'm also standing by to enter into a short trade. It doesn't happen very often, but it does happen occasionally when you have two possible analyses and you can't work out which analysis is the correct one. You could take the approach of choosing one and just going with it, hoping that you're right. But the advantage of trading using the FLD trading strategy is that you have a set of carefully worked out steps that you take, and if the market reveals the true analysis over the course of the next week or two, which it is expected to do, then we will have made the correct decisions in terms of making the correct trades, no matter which way the market goes. So that's an interesting situation that has developed in the Nasdaq. Let's take a look at the euro to US dollar. This is the analysis that we've been speaking about over the past few weeks in the euro to US dollar, and as you can see, I have a 20-week cycle trough in the middle of November, so that's 20 weeks, and we have an 80-day cycle trough positioned in the first week of 2013, so that's 80 days. Now, as you know, the very day that I decided that this might be the correct analysis with the 80-day cycle trough over here, we entered into a long trade as price crossed the level of the FLD, and so that was an A category long trade. Our T1 target was taken out the next day, so we exited that trade with a small profit. Our T2 target was reduced a little bit because of the adjusted level of the FLD, and but we exited from our trade 2 at a profit as well. And last week the market sort of went down and then back up again and then down again, so it's been going back and forth. According to this analysis, we are expecting this to be the B category interaction, and so the next trade in the euro to US dollar is expected to be a long C category trade. Of course, we still have an open trade, which is our trade 3, and we have started implementing our 3-bar trailing stop, which is over there. So the euro to US dollar is in a really good position. We have a profitable closed trade 1, a profitable closed trade 2, and a profitable trade 3. The worst that can happen with trade 3 is that we exit from that trade at a smaller profit than our trade 1 or trade 2. But we do still have an open long trade, and so depending on your trading style, you might not want to enter into more long trades, although we're carrying no risk on our open trade now. But you might not want to enter into another long trade in the euro to US dollar, but maybe you will, in which case you would be interested in entering into a C category long trade. I discuss entry levels and so on in the detailed video about the euro to US dollar. And of course, this is not the only analysis, although this is the most likely analysis in my opinion. There are 2 other analyses that might be playing out in the euro to US dollar, and I discuss those analyses in the detailed video about the euro to US dollar. Let's take a quick look at one of them. Here it is. As you can see from the title that I've given the chart, this analysis assumes that cycles are running long in the euro to US dollar at the moment instead of running short, which would mean that the trough in early January 2013 was a trough of only 40-day magnitude. And so therefore the long trade that we are in, the profitable long trade, is in fact a category E long trade and not a category A long trade. It makes little difference to the trade that we're in, but it does affect what comes next. And so what comes next would be an F category trade, a short trade, and that would be entered at the level of the FLD. And so in the euro to US dollar, we are also standing by to enter either a long trade or a short trade, and depending upon which analysis turns out to be correct, and I discussed the details of that in the detailed video. Let's take a look at our fourth instrument, that is the British pound to US dollar. Now, the British pound to US dollar has been a textbook instrument recently. It has exhibited really textbook FLD and price interactions, and we've managed to make some absolutely textbook trades in it as well. So as you can see, this is the analysis, and the British pound to US dollar at the moment, I'm only tracking one analysis because in my opinion this is pretty much the only analysis that I think is viable in the British pound to US dollar at the moment. And we've been enjoying the clarity that has been happening in the British pound to US dollar. So here is a 20-week cycle trough according to this analysis in the middle of November. Here was our A category trading opportunity, which as you can see we took, and it proved to be a very nice profitable trading opportunity. Here was our B category trading opportunity. Of course we don't take that opportunity. And here was a C category long trading opportunity. Again, it turned out to be a very nice profitable trading opportunity. Here was the D category price and FLD interaction. We didn't trade it, of course, because it was directly before Christmas. In fact, the entry would have taken place on Christmas Eve. So we didn't take that opportunity. And here was the E category long trading opportunity. Again, this opportunity happened on New Year's Eve, so I avoid trading over the festive season. So I certainly didn't take advantage of that trading opportunity. But following that, of course, was our F category short trading opportunity, which happened in the first week of January, and that was an opportunity that I did take. And you can see that our trade 1 reached the T1 target and exited at a profit the day after entry, and our trade 2 reached its T2 target, in fact, only last week. And so that T2 target was somewhere over here, and the exact level is in our spreadsheet. And so that was where we exited from our trade 2 at the T2 target level. So we made a nice profit out of our trade 2. Again, we have only one trade open at the moment. Our trade 3 is now open, and our 3-bar trailing stop has kicked in over there. There it is. So our trade 3 is also now carrying no risk. If the market suddenly bounces up again very strongly, then of course we get taken out at our 3-bar trailing stop. So that's turned out to be a very profitable 80-day cycle for us. We've taken 3 profitable trading opportunities. And what's going to come next? Well, of course, according to this analysis, what comes next is that price will bounce out of the 80-day cycle trough, and we would enter into an A category long trade at the level of the FLD, of the 20-day FLD. Let's take a quick look at our spreadsheet so we can see what's been happening with our trading. Here is our spreadsheet. As you know, I color the background to the rows according to whether these are trading opportunities that are about to be entered or that I'm considering. Those are the green background rows, and the blue background rows are trades in currently active trading opportunities that are still open, and the orange background rows are trades in currently active trading opportunities that have closed. Okay, so here at the top are the euro to US dollar trades. As you can see, our T1, our trade 1 exited with a profit of $266. So that's $266. Our trade 2 exited with a profit of $372. Of course, usually you expect your trade 2 profit to be double your trade 1 profit. But as mentioned a moment ago, our trade 2, our T2 target was reduced slightly because of the different level of the FLD cross, and our trade 3 is now on its 3-bar trailing stop. And so, worst case scenario, we would exit from that trade with a profit of $67. So we've locked in a small profit on our trade 3. Of course, that trade runs, and so if our 3-bar trailing stop does not get taken out, then we stand to make much more money out of that trade. It's what we call our lottery trade. Occasionally, it really does very well and makes lots of money for us. Okay, and the other open trading opportunity or active trading opportunity we have at the moment is in the British pound to US dollar over here. You can see our trade 1 took a profit of $200, and our trade 2 took a profit of $400, and so that's what you normally expect. Trade 2 is double the size of trade 1, and our profit, because of our 3-bar trailing stop on our trade 3, which is still open, will be at least $129. It can't get worse than that. So all in all, at the moment we have 2 active trading opportunities, and they're both turning a really nice profit for us. The euro to US dollar has made, I think that's $605 there, and the British pound to US dollar is currently sitting at a profit of $729. So altogether, between the 2 instruments, we've taken a total profit of $1,334. And of course, our trade 3 in the euro to US dollar and in the British pound to US dollar, both of them are still open, and so they could stand to make even more money. So that's 2 really good trading opportunities that we're benefiting from. Our Nasdaq and S&P 500, of course, don't have open positions at the moment because we missed that great trading opportunity over New Year because we were busy celebrating the New Year. But we expect trading opportunities to come around really soon in both of those instruments. As always, if you have any questions or comments, please put them into the comment box below this video, and I hope you all have a great week, a very profitable week. I look forward to seeing you later this week or early next week in the Hurst trading room.